Good evening, everybody, and welcome to TradeFinder Live. No Zach this evening, he's unwell, so you've got John here from the EWO support team to facilitate this session. Welcome. As we're getting ready for Rob Roy to join us, as usual, be aware that any information that we are imparting is in the interests of education only. We're not registered as investment advisors in the United States. If you'd like to take a screenshot of that statement, you're welcome to, or you can find full details at our website, ewotrader.com. And just a couple of other things. We will be covering the US market outlook during this session. Then Rob will conduct a review of any recent trade alert for our EWO subscribers, and then he'll get on to the weekly trade alerts, which I know is what many of us are here for. And finally, with any time that's remaining, we'll take general Q&A. Now, with that Q&A, just a reminder that there's no voice questions tonight. I know some of the subscribers are used to being able to talk to Rob on a Thursday night during our insiders meeting. But for this session, please use the Q&A if you're asking questions through Zoom. And obviously, we'll also look at the chat on some of the other social streaming platforms. So without any further ado, Rob Roy and the US market update. Rob, over to you.
Thanks, John. Thanks for stepping in. As John said, Zach is under the weather tonight. From what I understand, he has got the dreaded COVID, and so we wish him a speedy recovery. And very much appreciate John stepping in to run things again. It's good to hear your voice and commentary from the land down under. So as John said, we're just going to go right into. I'll take the screen over here and make sure everybody can see. As you can see from the background, I am back up in the mountains for the holidays, plus to get away. 2 hurricanes going right over my house within a month's time. That's enough. That's what you get for living in paradise, I suppose. But wow, what a month it's been. And some people fared pretty poorly through all that. But let's get to the markets. And as you can see, I don't know if you're watching intraday. The market opened, the futures were up, and then they came out with the PPI report. You know, the CPI report, I'd kind of made a little fun of that it showed a tick down, showing that inflation was only 7.7% annually now, or over the last year. Rather, we had come down off the 8%. And so the market took that as an opportunity to rally there on the 8th. And then today we had the PPI report. So the CPI is consumer, the PPI is producers. So think of it as retail versus wholesale. And so this is the wholesale prices, and it only rose 0.2% when it was expected to go up 4. So the market took that and ran with it. And so the futures basically doubled. They were up about 30 something. They went up to about 70 or so on the open of the market. The market had a couple blips down throughout the intraday part, and then around 1:30 there was a news article that came out that 2 missiles had hit Poland. And so it was from an Israeli news service, and there weren't many more details given, and the market just went straight down, as you can imagine, and basically gave up all the gains. And they believe we went down a couple points, and then as it came out, they were Russian missiles that had just gone astray and gone into Poland. A few people unfortunately lost their lives. But when they found out that it was part of the conflict that was already existing between Russia and the Ukraine, I guess the market took some solace in that, and we moved back to the upside and then ticked down a little bit right to the close. So it was a pretty eventful day intraday with some pretty good volatility. And you can see it by the bar here. We have an outside day, and that means the high of the day was above yesterday's high, and the low of the day was below yesterday's low, even though we finished dead smack in the middle of a pretty wild day trading wise. Now notice the high we're up to 75% here on this wave 4. If you've been watching the shorts, we've talked about this new zigzag that we have here in the wave 4. So if you haven't seen it yet, I am going to go ahead and show that to you now, which shows that there is more upside potential here. And if so, with a perfect 50% B wave correction there, the C wave extension comes to 411. Now let me put the Elliott Wave back on so you can see why that's important. Because if you're familiar with impulse patterns, you can't violate that wave 1 in the wave 4. If you do, it disqualifies the pattern. Well, note where that wave 4 goes is right at where the bottom of the 1 is. And so if we do complete this zigzag, it likely means that this entire Elliott Wave pattern to the downside becomes disqualified. So that's what we're watching now. We're hanging on by a thread to this downward 5-wave impulse pattern, but with this current upward zigzag, one thing we know for sure, we have a complex wave 4. It's just, does that wave 4 hold? Do we stay in the wave 5 and head lower? If not, there's a chance that, at least for the short term, the bottom is in. We would have to set a new impulse pattern to start to move lower, whether it be a zigzag or a new 5-wave pattern or whatever, if this one comes up here and completes, because that one again becomes disqualified. So lots going on right now. What do you do when you're in a market like this? And I know our alert subscribers are aware of this. We've not been super active with alerts because when the two Elliott Wave patterns, and this is not that unusual, by the way, to have multiple Elliott Wave patterns at the same time. What's unusual is that we have two qualified Elliott Wave patterns in opposite directions. So that doesn't happen very often. And so when that happens, the best thing to do is just let the market tell you where it's going to go. So if we don't have much time to wait, right? I mean, the high of the day today was 402. So if we go to 411, that's not that much further. And then we know the 5-wave impulse pattern to the downside is disqualified, and we can look for zigzag type trades, etc. But if we roll over here before we get there, then we can look to trade to the downside as well, with this zigzag pattern being complete around the 61.8% level. So I know people are interested in opinions, and zigzags are, it's my favorite pattern. Is we actually have a course coming up called Zig-Zag Mastery. Maybe John might even put a link in there for you if you're interested in it. If this pattern, if you've seen it enough on these Tuesday night trade finders to have some interest in it, it starts on November 23rd, where we're going to go real deep into this 3-wave pattern. So even some of you that maybe you haven't welcomed Elliott Wave that much, maybe you haven't spent much time to learn about it, I do think that it's an amazing pattern. It's not the easiest thing in the world to learn. And I know too many people that try to eyeball Elliott Wave rather than utilizing software that analyzes the immense amount of code that Ralph Nelson Elliott wrote in creating Elliott Wave. And so I tend to let the software do its thing. And that's what we need to do right now, is let the software analyze what's going on and tell us where things are going to go. And then there's plenty of time to make directional trades at that point. Right now, you just be guessing as to which of these two patterns is going to win out. So, it's just this small area here where you have a qualified pattern still down and a qualified pattern up. So two patterns that are qualified in different directions. You can imagine that doesn't happen very often, as I said, and there would only be a small window for that to occur. We just happen to be in that small window right now. For me, I love when this kind of stuff happens, because it's just so interesting to watch and see how it plays out. And if I had to venture a guess, again, I love zigzags, and I think the fact that the zigzag pattern is the more recent one, you put a little weight in that, whether it makes any sense to you or not. And I've seen a lot of the comments on YouTube, etc., and I get it. This market makes no sense. The Fed, we haven't gotten halfway through working the current interest rate hikes through the economy yet. I do think next quarter's earnings, I thought this quarter would be maybe a touch worse than it is, but mixed, and it's been mixed, but maybe a hair better than what I thought, but it's been mixed. There've been plenty of disasters, and there's been some, like Walmart came out. And then this is another thing, is that you never know how the market's going to analyze something. Walmart came out and they had good numbers, but if you listen to the commentary from the CEO, he was talking about how consumers' habits have changed, and Walmart's doing well because people are coming in there and buying their groceries. They're buying groceries from Walmart now, because if you go to one of the big retail chains, you know that it's expensive and your grocery bill has gone up. And so they're diverting things based on what they see in consumer trends. And that's where the big increases was in people buying groceries from Walmart. They're not buying the things that they were before. They're not buying TVs. They're not buying those kind of items. They're buying some clothing and the necessities, but even what would be considered surplus purchase, they're not even being bought at Walmart, but the market loved it. And so that had the futures up to start with before the PPI report came out. So that in a nutshell is what happened today. So let's go ahead and take this pattern off. As we noted yesterday, there was very low volume. So let's take a look at volume today. And you have to wonder, because the volume really did kick in when the market went down. There was some panic. Is that a new conflict? Is there some sort of a new military conflict going on when the reports of those missiles first came out? And so there was massive volume spikes to the downside. And there was still decent volume on the recovery back to the upside. But a lot of that, I think, is why we got back to average volume today. But notice how low the bar was yesterday. So we did correct a little bit of that overbought condition that we have. You can see the 10-day moving average here in yesterday's move. If we just walk it back a day, you can see that on the tick down, we were still just a touch overbought. And another reason why maybe the market just couldn't continue too far to the upside. It was getting extended from the 10-day moving average. So really interesting things going on. If this 5-wave pattern is going to hold to the downside, we have to turn very quick. So very soon. And if we complete that zigzag, then likely this 5-wave pattern is done. So we'll know in the next couple of trading days. As I said, you don't get this kind of scenario that lasts very long. So just be patient and don't try to guess and pick which direction things are going to go. Let it play itself out. Interest rates, we had this one little weird looking bar here. That was Friday, because remember, the bond market was closed in observance of Veterans Day here in the US. And so no bond market. Interest rates went down big on Thursday on the heels of that CPI report. Nothing happened on Friday, then a little bit of a tick back up yesterday, and then back down again a little bit on rates today. And then when you look at the dollar, pretty big move down in the dollar. Look where the wave 4 is, all the way down at the 38.2% fib level. So if the dollar is going to find any sort of footing, even if it's for the short term, it'll be now. And you can see we did close off of the low. We put the 10-day moving average on, and we are quite a bit oversold on the dollar. At least we were on the low, not so much on the close, still a little bit, but that's a pretty vertical move down. I wouldn't be surprised to see a little bit of a move back to the upside in the dollar. If we go too far, is that going to allow the zigzag pattern to complete the C wave? Maybe not, with the dollar moving back up too much, but this is a nice break from the highs. As you can see, it's a pretty substantial drop down in the dollar. And then we look at the VIX, and it was all over the place, as you can imagine. When the news came out and the market went down, there was a big spike up big spike, a couple points up, went up from 23, 24 up to about 26, and then settled down below 25 again. Pardon me. Different pollens up here. My apologies. Thank goodness the ribs are healing. Otherwise, that would have been quite painful. But right here, just below 25 on the VIX. And the question becomes, does the VIX come down and find this support area down here around 20? And it may. And you could certainly make an argument that the C wave extension goes up to 411 on the SPY. The VIX comes down to 20. It's a nice, neat package. And then we reevaluate from there. We're not there yet, but you could certainly make a case and understand why that is a likelihood and a potential to occur. So let's look at some of our other markets on the diamonds. You can see that's the one where we've been speculating with this relabeling, where the 5-wave pattern did become disqualified. Is the Dow back to being a market leader? You've heard me talk about this numerous times as well, where it used to be the Dow was it. I mean, King Dow. and we had the S&P, and the NASDAQ was newly emerging, and then NASDAQ was all the rage. And then people kind of just settled into, let's just look at the S&P. But now the Dow is like, we're still around, we still matter, and we're leading. And if the SPY becomes disqualified, you can certainly make a case for the fact that the Dow was the one that gave us the signal first, that we were going to go higher than a lot of people, including myself, thought. And so with that in mind, you start paying attention to the Dow again. And you can kind of make a fundamental case for that as well. If we're worried about the economy, if we're worried about people's spending habits, consumer spending, et cetera, you kind of look to the big companies, right? Because they're the big, huge companies, and those spending trends don't affect them as much as they would some other companies. And so that's a place where money goes to feel a little safer when you have defensive, if you will, when you have economies like this one where the Federal Reserve is raising rates at fastest rate in history. So look at this solid volume here. I wanted to show you this because of all of these volume spikes here, well above average volume. That's significant accumulation occurring in the Dow. So the institutions, mutual funds are not playing games here. They're putting significant money behind the Dow, which again, I think is another reason why I'd gotten to the point where until we started doing TradeFinder a while back and people started asking about the Dow, I didn't even look at it. I was one of those that was focused on the S&P and the Qs, were the main areas to look. But it's funny how it just seems like almost from a psychology standpoint, like the Dow is trying to assert itself that the Dow still matters. Now, when we look at the Qs, different picture here. You can see not really such a clean zigzag here. We have this low, bit of a double bottom there at 260 that you could make a case for, but the wave 4 is only at 58%. It hasn't even quite hit the 61.8% fib extension yet. Still a very well formed 5-wave pattern to the downside potential here on the Qs. But if the SPY becomes disqualified, as the Dow did already, it's hard to imagine that the Qs won't be drawn along with it. You've heard me say this numerous times as well. The Qs are going to underperform until the Federal Reserve stops raising rates. That's how it's going to be. And so when they do make the real pivot, not the 19,000 different definitions that we have of the Fed pivot now, but the legit pivot, in my opinion, when they go from raising rates to cutting rates, that's the pivot. The Qs are going to be a place to be because they will have underperformed for so long. They will outperform coming out. So worthy to keep an eye on what happens when the wave 4 gets up to that 61.8% level. And then we also want to take a look at small caps. Have we been able to get back above 190? No, but we're right there. And look what's happened here in the 5-wave pattern, 82% on that wave 4. So take that off. Past that 78.6% level disqualifies the pattern. So now we have this 190 area as resistance and a bit of a doji there. So isn't that interesting? A doji right at 190, right at the point of resistance. So it's kind of the rubber meets the road right now on the IWM. We're at the top of the trading range. Can we break through it? Let's look at the moving averages to see if we're overbought a little bit. Not a huge amount, but if we're going to try to break 190 and maybe go back to the old trading range of 190 to 210 that existed last year in that area, we're going to need a little more momentum, I think, than where we are right now. So a day or two sideways and then try to break 190 could be healthy if you're a fan of the small caps. Pretty interesting right there, though, a doji right at that area of resistance. And then I'm sure you've seen enough crypto news with everything that's gone on with FTX, et cetera. And so it was a pretty significant hit, but could have been worse, in my opinion. But we do have a pretty good little descending triangle building right here on Bitcoin. So when you look at that right there, you see that descending triangle right there at 16. We talked about 16, and if that didn't hold, maybe 12. So that makes a lot of sense because that's a 4,000 point roughly wide mouth of the triangle. So if we do get a downside breakout of the descending triangle, you can look for the next area of support will probably not be before 12. 12 would be the very likely move down if we break lower than 16 on Bitcoin. And if we break back to the upside, we still have that problem of fighting 20,000, because again, that's about where we should go, breaking out of the top end of this descending triangle, or breaking to the upside out of the descending triangle. So the areas to watch, something's going to happen here, and it's going to be about a 4,000 point move. If it's to the upside, you look for 20,000. If it's to the downside, you watch for 12,000. That's pretty simple as far as what to look at on Bitcoin now. So our international markets, and we have the EWA here, which had a real nice move to 23. We talked about this last week. If we got above 21 and could hold it, we'd go to 23. I didn't think it was going to be that fast. I mean, it was a rocket ship right up to 23, and a very logical point of resistance here. And look how this Elliott Wave pattern has played itself out. The 5-wave pattern with that wave 5 right at the 61 point. It doesn't get any more Elliott Wave than what you see on the EWA in Australia. So 61.8 on the 5 wave to the downside, which means on the recovery, you go back to the previous 4. It doesn't always go back this fast, but it's done everything it's supposed to do. So now what do you do? Well, if you're looking to trade the Aussie market, again, pause, because this is everything has played out. The 5-wave went down. It hit a major fib level, my favorite fib level, because it's so strong. It did what it was supposed to do going back to the previous 4. Now where do we go? Let it tell us. Let it form its new pattern, and then trade that. Again, you're guessing from this point. If you're trying to trade the EWA directionally, it's a flat out guess. You're overbought short term, so doesn't lend to an easy break of 23. In fact, I would argue that if we break above 23 tomorrow or the next day, it won't hold because we're too overbought to break a major point of resistance right now. It could break it, but I think it falls back if it tries it now. If it goes sideways for a bit, even pulls back a little, lets the 10-day moving average catch up and gain a little bit of energy and momentum back here, because just view it as being a little exhausted on this vertical run, then it can make an attempt to break above 23 that has a chance to hold. But really interesting looking chart there. I think you just want to be patient for a few days and let it play itself out. And so with Canada, we talked about 33 was the same as 21, and then their next level is up at 36, but we didn't quite make it there. So the EWA's made it to its next level, but we haven't quite gotten there on the EWC yet. And you can see not quite as overbought as we are on the EWA. So a little sideways here, right at 35. Let's see if we can break it up to the 36 level. But you could argue that this is healthy, that we're consolidating here, this overbought condition, and then maybe build that momentum and energy and see if we can break above 36 along those lines. Really interested to see what happened in the INDA, and not much. So right here, back to that 44 level, held 41. All these things that what we've been talking about for weeks, all these levels that we've been talking about are all being hit. Just amazing the way everything, all these patterns are playing out as you would expect them to, and especially with what we've been talking about. So 44 is key. Now what happens? Not really that overbought on the INDA, allowed the 10-day moving average to catch up. And there's a chance we could break above 44. And if we do, there's nothing in the way until you get up here to the April highs right there. So you would think that that run could actually happen in a relatively short period of time if we can get above 44 with follow through. So if we can get above 44 with a follow through day, 46.5 is probably where we're going. And again, maybe in a very short period of time. So taking a look at, we've been looking at the EWU a bit in some of the weekend updates on our YouTube channel. For those of you that are watching YouTube, if you haven't visited our channel, please do so. Elliott Wave Options, where we do a weekend update every single weekend. And I am amazed by this chart. with everything that's going on over in the UK, to see this move to the upside like this, mind-boggling to me. But that's why we like to trade technicals. Hard to fundamentally justify this chart, but from a technical standpoint, it's a really clean Elliott Wave pattern, and we're at a 50% wave 4 correction, and we'll see if it makes it to 61.8. If it turns back here, what happens from here? It's really going to be pivotal over the next few days on the EWU as well. So I think if I'm going through all these markets, to summarize, we're in a point, I don't know if you'd call it an inflection point, maybe you would, or at least a point of indecision where we may not have dojis all over the charts, but we're all at a point of resistance, and we need, or overbought conditions, and we need to calm things down and let the next couple of days play out, and the charts tell us where the next move is going to be. And as I said, there's plenty of time to make your directional trades once you have a clearer picture. It's too muddy right now, and I think that's the buzzword, is muddy waters everywhere as far as where do we go from here with all these wave 4s at crucial levels, with all these charts that aren't in 5-wave patterns at major points of resistance. Just everything across the board is the same. There's not really a clear-cut directional picture in any of these charts that we looked at. Everything is at a point, for different reasons, of let's wait and see what the next couple of days bring, and then we can go from there. All right, so let's go through and look at some of the last few case study considerations. We only have 3 active ones from past trade finders. And the first one we'll start with is AGCO. And this one we looked at back, as you can see, on the 25th of October. And we were looking for a potential move up to 140. And basically what we were looking for is a move here to the previous wave 4. And if we got above that, then we could potentially go to the new highs. And we take a look at what's going on there. Look how close. I mean, we got within a whisker of that previous wave 4, and we started a new impulse pattern to the upside here. So we're in a wave 3 higher. So, you've got a nicely profitable trade. I don't know how greedy you want to get on this. We got awfully close to that previous wave 4. Now let's look at the DMI and see if it garners hanging around a little bit longer. It still shows there's strength in the move, but you have to respect that ADX got near 40 and then backed off, and it hasn't really. So we were running up towards 40 on this high. We came back and we've made a significant new high, but we haven't on the ADX. So that's a little bit of divergence, which I think would be concerning there. In other words, we've made a new high here on the chart in price, and we did not confirm it with the ADX telling us that there was a lot of strength there. You have to respect that the potential for that wave 4 could occur, even though we didn't quite hit the wave 4 target. We just got ever so close to it. But I think the prudent thing to do, if you've been following this one and you haven't taken profits, you probably want to consider that. I'm going to go ahead and cross this one off. So I'm going to say that was a winner. And if you wanted to hang around, I think you're being a little speculative. But there's not a strong argument against it other than that divergence in the ADX, which to me would be enough. So here's ADP that we looked at on November 1st, and there's the move there. So if we go back, where were we trading at 243, and now we are at close today, 253. So we're up $10 on that. So that's a pretty nice move. And if we look at the moving averages here, a little bit of sideways here over the last few days. So kind of rectifying the overbought condition that we had back here on the 8th, or that's the 10th, excuse me. Could there be more? It's hard to imagine being this close to 260 and not going up and hitting it. So I could see certainly wanting to hang around this one. So we'll just go ahead and leave this one on. But I wouldn't hold anything against anybody that wanted to take profits in that one either. And then as we talked, some of you made comments about this on the Insiders Thursday night, and picking NVIDIA, one of Zach's favorite stocks. to move up towards the 160 level, and boom, just within a week, we've blown through it. So a great move there, getting a little vertical for me. I think you're being pretty greedy if you're hanging around, but when you look at the DMI, you're like, well, you got us turned on to this DMI indicator, and it's telling us that there's likely more to come because that's a very strong move. I can't argue with you. I love the DMI, and it is telling you there's strength behind that, and it's likely not done. The one thing that concerns me, though, we're a little bit overbought, not significantly so, but that doji may mean, yeah, we need to rest a little bit, but I don't like this vertical part of the move. So I like this 45-degree angle moves. When you're, again, nothing moves in a straight line, but when you move in a 45-degree angle, the corrections tend to not be as severe. When you go vertically, then the corrections are vertical. So what goes straight up often comes straight back down. So I would be concerned about some sort of a significant move back down towards that 10-day moving average. It doesn't have to happen. The other thing that can happen is it just goes sideways unless the 10-day moving average catch up. But one thing I do know will happen is this gap will close. The gap between where we're trading and the 10-day moving average being separated, that will not last. I don't know which of the two scenarios will rectify it, but it won't last. But boy, that's a nice move. And I'm just we'll keep an eye on it, but I'm gonna go ahead and cross that off because it hit our target. So that's like if you have a trading plan and you have an idea, okay, this is what I expect the stock to do. And then if it does it and you hang around longer, are you being greedy? You know, you could make an argument, I'm trusting my indicators. That's a valid argument. But the original trading plan was, we think it's going to go to 160. It went to 160, and now we're asking more. Are we not satisfied? Are we ever satisfied? You know, you get into all those arguments, which is what makes trading, as far as when to get in and when to get out, difficult. And that's why for our alert service, we do alerts for entries, any adjustments, and exits, because that's where it becomes difficult to find out what to do. So all three of those were very good examples of case study considerations that all would have been nicely profitable in their last 3 weeks. And so let's see if we can find one tonight and keep this nice string alive going. And we'll see if we have any other impulse moves. Oh, wow. When you see this EW bullish impulse stocks, that's actually my Elliott Wave options. That's my impulse search. And you rarely see, because there's a lot of indicators in there. All of our favorite confirming indicators are located within this search. To see 13 results is about as many as you'll ever see. Usually it's a handful, 3 to 5, maybe, is all you have to look at. And so you whittle down the universe of thousands of optionable stocks down to 5 or less to look at normally on a daily basis. So 13 is a lot. So let's quickly take a look at these and see if we can see something. There's some retailers on here, which is interesting. You kind of want to draw your eyes to Dollar General, don't you? Especially with what just happened with Walmart and the fact that people are being a little more prudent with their spending dollars now. Inflation has hit the pocketbook, and it looks really good. The ADX is not above 20 though. So this goes on a watch list, and you may wonder, well, why is it showing up on your search if it isn't triggered yet? That's part of what I put in the search. I don't necessarily have it set to where the ADX has to be above 20, because if it is, then you get some that are already run so far that you missed them. I like to see it when the ADX just breaks through 20. You tend to catch more of the move that way. And so you get in just a little bit earlier. Again, nobody gets in the bottom and out at the top, but you get in a little bit earlier. And so with that, sometimes we get results here where ADX hasn't quite moved above 20. But can you imagine, look at this setup here. We're at 260 here, a major point of resistance. The ADX is trying to set up, but it hasn't triggered yet. We are between the two directional indicators. They're separating. The ADX is curling up. So if those two directional indicators continue to separate as they are here, and that ADX is able to make it above 20, and that coincides with the stock breaking above 260, wow, we could be off to the races. We're not in a 5-wave impulse pattern yet, but I would argue that if we break above that 260 level, probably will label some sort of an impulse pattern movement there. I don't think that's a qualified zigzag. I think that correction is too far. No, it's not actually 70%. It just hung in there. So we actually do have a barely qualified zigzag here with potential up to 270. And I would argue that I think you have a pretty good chance of an extended C wave here if that DMI does set up. I just want to highlight and reiterate here, just because the ADX is curling up, don't just assume, oh, it's going to break above 20 anyway. I'm just going to go ahead and get in now. It's curling up. Give it a couple days, it'll be above 20. Our subscribers know that we've looked at these enough times that it will look exactly like this, like it's setting up as well as the DMI could set up, and that ADX will get up to 20 and then just roll over and go down. That's why it needs to actually trigger. It needs to break above 20. So don't get greedy on that. Let's watch this. So I am going to put this on a watch list here for Dollar General. And let's see. Yeah, and I do still handwrite my watch list. That's how tech savvy I am. So let's go back and, you know, with the results from Walmart, certainly that created instant interest there. Oshkosh, let's take a look there. And that is one nice looking, see that? This is the kind of move I'm talking about. That's what I like. The 45-degree angle just trucking along here, pun intended. And then, boy, this is going to be a hard one to beat. Let's see what the, yeah, this is going to be our, I don't even need to look in anymore. This is going to be our case study for tonight. Is you see this move here, love that 45-degree angle move. The DMI is triggered with the ADX above 20, so that's what you want it to look like with the separation. And the only issue here is we're getting close to this previous 4, and you have to wonder what happens when we hit that. So it's not a huge move, but that next $5 is very highly likely to happen. So it's not quite 10%, which we're normally looking for, more like about a 6% move out of the stock. But I would say that the odds of that happening are really strong, and then we'll reanalyze the DMI to see if it looks like perhaps we could break above this wave 4, because the next level of resistance would be up around 110. You could make an argument, is it really going to get up to 98 and not go back to 100 because of I call it the tractor beam effect of those big round numbers, how they just tend to draw the stocks to them. There's no rhyme or reason for it other than it just seems to happen a lot. You could argue that a lot of program trading just programs in those levels for whatever reason, just because they're general levels. But so you can see somewhere between 98 and 100 is where that could go. So let's make that one not a big move. But we don't necessarily have a huge move left in the market either. So I think this all plays out. So OSK up to 98 or 100. And that'll be our case study consideration for tonight. Again, we won't have a whole lot to look at from previous case studies next week either, with the ones we crossed off tonight. So with that, John, I'll open it up to questions for whatever time we have left.
Hey, Rob, looks like we've got, close to 20 minutes left, 17 minutes. So well done on that. And just in advance of passing anything through, there are a lot of questions coming. So I'll just reiterate what Zach says each week, which is we don't get to your questions. We apologize. It's not the validity. It's just the volume that's coming through. Talking about Zach, topically, we've got a couple of people asking, Edward in particular, from YouTube for Moderna, mRNA. Made a little bit of a run
there, John. Good on you. That was good. I think you and I were chatting earlier, John. I think y'all are seeing some more of it down your way, down under as well. And so it sure looks like Moderna is on a bit of a move higher. Now, once it hits 200, it's going to have some resistance there, but that DMI looks really good. So yeah, I think 200 is likely to happen. It's 15 points away, so it's not a huge move, but that's a decent move. That's almost the 10% that we look for. So yeah, I like that one a lot. And I think there's extremely high likelihood of that 200 level getting hit. Then we'll have to reevaluate and see if it has enough momentum or strength to try to break above that. But that's a good looking chart right there.
No problem. And just sticking with the questions from YouTube, Scouger Gaming has asked if you could take a look at TWST, which is twist. And he's just added that there's a big short report came out on this.
Big short report in that it's heavily shorted.
I can't add any more. That's all that he's said. So
okay. Well, there was a big move to the downside. So boy, it's vertical moves there in the two directional indicators. Pretty strong move. Was this earnings? Is that what happened? Or was that what caused it? Oh, the short report in front of earnings. So perhaps anticipation of maybe a miss on earnings. Yeah, gosh, you could take a speculative shot at this one, couldn't you? You have to be concerned that if it's heavily shorted and the earnings come in and they're decent, then you get short covering, right? And then you get the big rally from that. And so if that's the directive, then you could see that. So the speculative move would be, holding your nose in front of earnings and hoping that earnings aren't as bad as what's clearly expected. And then you get the short covering rally with that big gap there. It's not really that oversold right now. And then on the other side of the coin, if it breaks 25, then look at that. Everybody likes when I say Katie bar the door. I mean, there's a little bit at 20, and then it's in uncharted territory, even below the IPO price if it can't hold 20. So, if it wasn't so volatile, you would say that's a great strangle, but there's way too much volatility in it now for that. So yeah, hold your nose and close your eyes and put a thumbtack on a trade, speculative trade would be to see if you get the short covering rally on that earnings report that's only a couple days away, or wait and see what happens. But the problem is that if it breaks 25, it's probably at 20 already, and whether or not that holds or not is iffy. It could be, who knows where it could go to the downside, but it could certainly sprint back to the upside if the earnings report is even slightly better than what apparently is feared from that report. Another interesting looking chart.
Thanks, Rob. And also just thanks to everybody on all of the platforms passing on their well wishes to Zach. I'm sure he appreciates that. Moving back over to your audience on Zoom, we've got a couple of people asking if you could take a look at Tesla, please.
Yeah. We asked about that in the last update is what people's thoughts are. I wanted to hear everyone's opinion on, because, Elon sold more shares. And could it recover it? So, this is when he sold here, and it's recovered some, because the last time he did it, the stock rebounded and recovered when he sold the shares to buy Twitter. And now he sold a whole bunch more to try to, do whatever he's going to do with Twitter. And I just wonder if people are going to grow weary of that, and be concerned, when is he going to sell more? How many more billions of dollars of shares is he going to sell? And when's he going to do it? All that indecision there is not positive. So the stock did bounce back up to 200, which is where we thought it would go, because it broke that level and was oversold. Now we find out. So it hit 200 on the high and backed off. And it's also right where the 10-day moving average is. So if you're bullish on Tesla, you desperately want this back above 200 and quick, because you're testing that area now, which used to be support and is major resistance now. And if it rolls over, it's probably coming down to this wave 5 target at 140. If it doesn't get back above 200 in the next day or two, I would say that's in real danger of occurring, coming down to this wave 5 target. So let's just call it 150 just to round it off. But the wave 5 is actually right there at 140. But if we get back above 200, then we go up here and perhaps we're in the wave 4 corrective bounce to the upside. We do have this gap that we've talked about before, which would be pretty ambitious, I think, right now. But let's say, people have asked, is there a case scenario for a rally into the end of the year? Well, I think we've started it, right, with the CPI and the PPI report. And if they can create enough short covering with these moves to the upside, it doesn't matter, what you think about the economy or the Fed continuing to raise rates, et cetera, any of those things. First of all, the market's looking 6 to 9 months ahead, right? It's not looking at what's going on right now. It's looking to where things will be down the road. And what I've surmised on the fact that we have rallied a bit more than I thought we would, is that perhaps what's being priced into the market is not the fact, and I think this is what's tripping people up, it's not the fact that the economy is not going to go into recession as bad as we think, that's not that that's going to happen, but that perhaps the recession comes maybe a little sooner than later, and the Fed does make the big pivot where they realize they've overshot the mark and they cut rates sooner than what's expected. And I think originally they were pricing out like next summer, or even into September of next year before the Federal Reserve would even consider a rate cut. So perhaps based on inflation coming down, the economy going into recession, et cetera, that the Federal Reserve feels like they can loosen policy just a little bit from this extreme tightening that they've been doing. And perhaps that's what the market is pricing in. So you add that in, and there's your recipe for a potential rally into the end of the year. But anyway, back to Tesla. 200 has got to get back above 200 like within the next few trading days. Otherwise, I think this level down here is in real danger, especially with all the ancillary noise going on around it right now.
And Rob, a couple of people on YouTube just discussing whether or not that last little formation is potentially a bear flag, just a small one there near the wave 3.
It very well could be. It looks like it, doesn't it? So,
yeah. All right. James on Zoom is asking if you could take a look at BTU.
Good old Peabody. Making a pretty nice move to the upside here, and right at resistance here in this wave 3. It's been in a trading range for a long time, as you can see, but notice how the trading range is compressing. It's almost like this is a combination of a sideways trading range right here that morphed into a triangle. Look, see, so for here, it was just a clear-cut trading range, right? We went up to 30, came down to 21, call it 20. So 20 to 30 trading range here. And then all of a sudden, the lows started getting higher. And we've moved into a bit of a bow, if you will, here, as far as an ascending triangle at the end of this trading range. Let's see where the DMI is here, the ADX. It's already moving up here. It's kind of giving you an idea. I'm very hesitant on triangles, as you know, to ever pick a direction, even with a strong DMI. A trading range, I feel the same thing, let it show itself. So I would still say that even though the DMI is leading you to believe you're going to have an upside breakout, let it happen. It may very well happen, especially based on this fact that all of a sudden the lows have been getting higher as we're getting here. but I would wait and watch. I would want to see it get above 30. You don't have long to wait. Close at 29.19, because if you get above 30, look at that. So you're in clean air, using the racing analogy that I always talk about. When the car's out front, it's racing in clean air. When you're in the back of the pack, you got everybody's exhaust and the bits coming off the tires and everything else going into your radiator, and the engine runs much hotter and it's harder to move up from the back. But when you're out front, you got all that clean air, keeps your engine cooler, tends to perform better. When you have a chart that breaks above into a new all-time high, it's like nobody knows where it's going to go, and it just tends to really run when that happens. There's no areas of resistance for people to price machines, program trading, anything along those lines, and they tend to really run. So I think that if we keep an eye on that 30 level, I'm actually going to add that one to the watch list too, because with that long of a trading range, getting up above, we got a friend here helping us out. If we break above that 30 range, we could be off to the races there on BTU, and a stock that used to be a great mover in the past.
Thanks, Rob. And also Jarrell on Zoom is just saying that he's been loving the fact that there's such volatility there. The IV is really juiced on the options. He's selling premium on it. So there's another idea for you.
Yep.
Now,
well, that tells you that something's about to happen that's being priced into it too. So
absolutely. George is asking if you could take a look at HZO.
Yeah, we had an attempt to move to the upside today. We just had a wave 4 there at 57%. And, we have this one in our alert service as well. So right here at the wave 4, right at that fib level, it got turned back, finished on the low of the day. I think that was it. And I think the Walmart, because this is high-end consumer spending here, and I think that commentary was negative for this stock, and I think we're going to come back down and fill that gap down there at 30. Then we'll see if we're going to make it all the way down to that wave 5 low, but I think 30 is likely coming in the not too distant future here on HZO.
All right. And Rob, not to distract you, but Mike's just reminded you that there's an SLS launch from Space Coast in a few hours. I know that's always for you. And
is that Artemis?
I don't know the details. It's Space Launch System, right? I think from memory.
Okay.
But I don't know which rocket is launching. And then back to the markets. P on Zoom is asking if you could take a look at CAT. C-A-T.
As they saw the cat walking in front of my keyboard there.
Oh, maybe that's all he was commenting on, and I got that.
Yep. It's the friendliest cat in the world. He hangs around all day, all around this computer. He's just sitting there staring at me. He just watches me all day at the computer. It's the strangest thing. He'll get in the chair right next to me and just sit there, and it's like he likes the market too. But as far as the stock cat, we made it up to this wave 5 high, which was possible. I didn't think it would happen before we retraced this gap because it was such a vertical move, but it did. And I think that's the end of it. I think we're going to come down and create this wave 4 back down here. It's almost too nice and neat though, isn't it? Right within the wave 4 projection there to fill the gap to fix this, because you know what normally happens when you go vertical, you retrace all the vertical move. And so all those things all converge right at 200, which happens to be a round number as well. So I think all that's highly likely. If we do rally into the end of the year, I think there'll be some rotation into some of the harder hit areas, and certainly Caterpillar is not one of those. And so stocks like this is where money will rotate away from. And that's if, remember, it's that zigzag has to complete first. We still have a qualified 5-wave pattern to the downside. But if we do start and we break that and we disqualify it, I don't think money is going into these stocks. I think it's going to go into some of the higher beta stuff that people feel like they can make some money on the move into the end of the year.
All right, thanks, Rob. We got so many symbols coming through, so I apologize to everybody. We're not going to get them all, obviously. But Chuck has just asked if you could take a look at Disney and give us your thoughts on that one.
Yeah, we haven't looked at Disney in a while. That's a good one to look at. Good call. You know, the interesting thing here is they expected, and obviously because, you know, living in Central Florida, not that far, we get Disney stuff every single day. It seems like with the fact that the theme parks had to go through all the COVID stuff and everything, and then people came back in droves when people were allowed out. But they were disappointed in the park numbers, and it was the streaming service numbers that did a lot better than expected, which is why we came back up. So we've come back up to fill this gap now. And so we're moving back towards 100. And you can see that that's the wave 4. And so then it makes you wonder, well, what's out there? Is it another COVID? I mean, what's out there that would turn this back? Because you would think that with room to grow in the theme parks and, you know, overseas in Asia coming back from their extreme lockdowns and everything that they've had, that there's so much potential from the theme park side of things to enhance revenues and earnings. So when you have such a well-formed 5-way, look at that. I mean, that is as nice of a Elliott Wave impulse pattern as you'll find. It's so uniform and in proportion, and we're right at a 38% fib level, and we're right at 100, and we filled this gap. So the concern is it rolling over. You just wonder, you know, from a fundamental standpoint, this is when you kind of shake your head and say, I don't see the fundamentals for that, but that's why we trade technical patterns. Now, if it gets above 100 with follow through, then you have to reevaluate and see, okay, how far can that wave 4 run? Where's the 61% extension? Probably getting up into this area right here around 105 or so is where it could go before the next major point of resistance. But it's got to get above 100 first before we even start talking about that. And so we filled the gap, and we'll see from here. But really good looking chart, about as proportional of a Elliott Wave pattern as you'll ever see.
All right, Rob, we're right at time. Would you like to take another one, or do you want to wind up here? I'll leave it your decision.
Now let's do one more, and then we'll wrap it up.
All right, I'm going to go with Stephen's request for AMZ. I think he's asking for Amazon there.
Okay, that's a good one to finish on, because holy cow, did it get ugly there for a bit. A little disappointed to see the turnaround on Amazon. Just, I guess, from a surprise standpoint, don't have any positions or anything here, but it hit the 30-day moving average, which I don't view that as a major support or resistance area. It's only on there because of the 1030 cross part that we look at. So I find that interesting. And with the wave 4 potentially a little bit higher, filling that gap. I think Amazon at least gets up there. You would think so from seasonality trends, right? I mean, this is their time of year. So I feel like even though it did turn and close near the low, it stayed above the 10-day moving average. Would have liked to have seen it hold above 100 on the close, though. But I think there's a great chance we hit this wave 4 and fill the gap. So I think 110 happens, and then we got to look at it again and see where things go from there. So thanks, everybody. You know, I sign off every time, and we mean it. We're passionate about it. Time's the most valuable asset we all have. We very much appreciate when you devote some of your valuable time to us. We try our very best to make an informative, educational use of your time. Thanks again. Have a great rest of your week. We'll have a lot to talk about next week.